welcome to a new edition of our show. Money is business, as we always say, and business means money. Stability and business mean a lot of money. And tonight we're talking, as usual, about the hiking exchange rate of the dollar and the economic situation in Egypt. How does that affect investment, the banking sector? A lot to talk about. And we have with us here our guest, Dr. Ibrahim Al-Ashmawi, former Assistant Investment Minister. Welcome, sir, with us here on the show.
It's a pleasure.
Pleasure having you. We'll go for a short break, after which we'll be back again, and we'll start our talk. Stay tuned to us, don't go away.
Fitch Ratings Incorporation said decisions by the Central Bank of Egypt (CBE) last week, including a devaluation of the Egyptian pound, are broadly credit positive, but the country faces a difficult year of slower growth, high inflation and large financing needs. On March 14th, the Central Bank devalued the currency by 14% against the US dollar and said it would adopt a more flexible exchange rate policy. The CBE supported the devaluation by auctioning $1.5 billion to help importers 2 days later and hiked its main policy rates on Thursday by 150 basis points. These decisions reflect the pressures on the currency from a widening current account deficit, insufficient capital inflows, and low levels of international reserves, which are less than 3 months of current external payments. The auction on Monday devalued the currency from 7.73 to $1 to 8.85 to $1, while the auction on Wednesday was at the slightly stronger rate of 8.78. This is more than a minor adjustment and takes the rate closer to the parallel market rate, which was weakened to above 9.5 to $1. Forecast builds in further exchange rate weakness to above 9 Egyptian pounds to $1 by the end of 2016, given the challenges the economy still faces. Expectations of devaluation have also restrained foreign inflows into Egypt. The CBA hopes that its decision last week will bolster confidence in the currency and nudge portfolio investors off the sidelines. Two initiatives in the banking sector may help. Two state-owned banks are now offering foreign investors options on treasury bills with exchange rate hedging. These banks are also offering 15% on 3-year certificates of deposit for domestic investors, provide them within 60 days in exchange for foreign currency. However, inflation is likely to rise again, and the weaker exchange rate will make imports more expensive. If plans to implement VAT come to fruition this year, that could also put upwards pressure on prices. In this context, it was no surprise that the central bank raised interest rates following the depreciation to try to anchor inflation expectations.
Welcome back again to Money Means Business, and our guest is Dr. Ibrahim Al-Ashmawi, former Deputy Minister of Investment. Welcome, sir, again with us. And well, the whole story of the banking system in Egypt, how do you qualify it nowadays? Well, now vis-a-vis like what's going on and the devaluation of the pound, the new decrease it took in the central bank.
Actually, it's no exception. If you look to the bigger picture and you look to the Egyptian economy and you look to the performance of the economy before 2011 and after 2011, you would see a big difference in macroeconomic indicators. One of the sectors that was not really touched was the banking industry. If you look to the banking industry and the financial soundness of the sector, you would tell that this industry is still performing. The major indicators of the financial soundness would be the non-performing loans in the industry. The non-performing loans is around 7.2%. of the total loan portfolio. You're talking about international standards of 5%, so you're still in a good shape. The other indicator would be the assets, return on assets, and the return on equity. Return on assets, you're talking about 1.3. Return on equity is one of the highest in the region of 19%. The capital adequacy ratio as well. So again, this industry is still sound. It is financially sound, but every now and then you got kind of some slaps in the sense that you have a problem of the foreign exchange. You have a problem in the availability of dollars in the market. If you look to the main sources of dollar, you'd find exports comes as number one, then workers' remittances, then tourism, then foreign direct investments, then the Suez Canal. So if you look to the 5 sources of dollar income, you will find that these sources, in terms of volume, they went down dramatically by 50 to 60%. So before 2011, you used to have a foreign reserve of 36 billion US dollars. Now you're talking about 16.5 billion US dollars. The problem is not the foreign reserve, the content of the foreign reserve. Where does the foreign reserve comes from? The problem is, as I said, that the sources of income of dollar in the foreign reserves, they got affected dramatically. So the CBE is trying to manage what it has from reserves, but it is not the responsibility of the Central Bank of Egypt to increase the reserves. If other economic sectors are functioning, if export is functioning, if workers' remittances is functioning, if tourism, if foreign direct investments, if the Suez Canal use, if every single source is functioning, then we will end up having a good foreign reserves. But in the light of the absence of such sources, you end up having very little of foreign reserves. Okay, so the problem is supply and demand. Supply went down, demand went up. There is a gap or a big gap between supply and demand. Then the dollar is, as a value, is not appreciated. But what happened to our local currency, that our currency is depreciated or devalued. There are two systems. Either you have a policy whereby you fix the exchange rate, or another policy whereby you leave the exchange rate to function as per market supply and demand. I would say we are somehow in the middle. Sometimes the CBE interfere to keep the value of the local currency. Sometimes pressure from the outside world, pressure from the demand side. I mean, the exchange rate usually in the formal sector and the informal sector, you witness a difference of 5 to 6 piastres. And that was the case for years and years. But because of speculation and because the dollar became a strategic commodity, everybody is holding the dollar. Even the normal Egyptians, whom are not trading in dollars or they are not using dollars, they are keeping dollars because they see the dollar is like gold, a strategic commodity that is appreciated by time. So the problem is that you have a shortage of supply from the 5 sources of dollars, and on the other side you have lots of commitments whereby imports have increased significantly. You're talking 72 billion US dollars. Exports reduced by 25%. You have a trade deficit of like 30 plus billion US dollars or even more. So what happens when there is a shortage in supply and there is a demand that is growing on the dollar? What happens to your currency is depreciated. Taking into consideration the inflation rate, in the past, if you look to the purchasing power of the currency, of the local currency, versus the purchasing power of our Egyptian pound now, you'll find that there is a big difference. What you used to buy in the past versus what you're using to buy right now. So the problem is not to do with the CBE itself, because the CBE manages what comes to it from different sources of supply. So that is the problem. So the problem is supply, shortage of supply, high demand, more commitments from the government to pay debt service, more commitments from the government to subsidize strategic commodities, so you need dollars. So the commitments for dollars went up. When the supply is in short, then you end up with such a problem, which is the exchange rate.
Then,
so that's the problem.
With this, image, is it so gloomy that, it cannot be remedied somehow, with all these problems? Of course, we came, from 5 years of, let's say, political upheaval. It's not easy what we're going through. But then, we import a lot and we export very little. Exactly. So, there is a very big gap between that, How can we just remedy that with all
well, you have other sectors. Other sectors have to function ASAP as soon as possible. Of course, I don't believe on conspiracy theories, but unfortunately, if you look to all sources of supply of dollars, the 5 sources are badly affected.
Which means that there is something wrong going on.
Definitely there is something wrong. The question would be, what kind of policies, what kind of instruments are you using to make things stable? So what kind of monetary policy do we have? For instance, if you look to the interest rate is going up. We had a couple of weeks ago, like 100 points increase, that's 1% increase. So what happens? People started saving, okay, because you don't have investment opportunities on the other side. Okay, so when interest rate goes up, what happens to the household sector and what happens to the corporate sector? You don't have enough investments. So people tend to leave their money in the banking industry, which is very good. But is the banking industry employing such savings? That is a big question. You have the latest figures talking about loans to deposit ratio like 40-41%. And the rest goes to buying government debt. Okay? So the banking industry started moving from investing, moving from giving credit facilities to the household sector and to the corporate sector into lending the government at a higher rate. Okay? When that what we call it crowding out, local crowding out, that the government started to crowd or getting into the queue to borrow from banks. Okay? So this industry needs a boost. You need to, at a certain point, I mean, we are talking as outsiders, but decision makers, they know the situation better, right? So you cannot encourage inward investments when you increase the interest rate. I don't mind with that. The most important thing for investors is to have stable kind of economic policies. There are complaints that the policies are not stable, that the fiscal policy is not coherent with the monetary policy. When you have to have a kind of synchronization, or they have to be in the same direction. So you find complaints about what is the government vision, what is the economic intent of the country. Is it after encouraging inward investments? Again, if you want to encourage inward investments, you have to lower interest rate, right? So why the Central Bank of Egypt is increasing the interest rate? To absorb inflation. That's on one side. And to do with dollarization. and now you have different products in the market, CDs with variable interest rates to encourage Egyptians to submit the dollar. But that's actually not happening. Everybody's sticking to the dollar. So the problem is now you don't have the informal sector that is absorbing the dollar or sticking to the dollar, but the household sector is sticking to the dollar. If you open all safe boxes in banks, you will find zillions of dollars sitting, not going through the veins of the economy. This is a big problem because that creates more demand. So there has to be a way out to overcome or to remedy such a situation. It is not only the CBE, by the way, because everybody is pinpointing fingers on the Central Bank of Egypt. Mm-hmm. It is not only the Central Bank of Egypt, but other economic sectors in the country have to function properly to reduce the pressure on the Central Bank of Egypt. The monetary policy is indeed significant and important, as well as other policies within the economy. So that is the issue, that do we have a sound banking industry? Yes. We have one of the highest returns on equity in the industry in the Arab world and in the Gulf area, which is 18.9. It's 19%. You have 11 banks out of 38 banks growing at 35%. So all the indicators in the industry are very lucrative. That's why banks, overseas banks, were encouraged to acquire banks in Egypt. It's a very dynamic banking industry, but we have, and we have to address that, we have the problem of the exchange rate. And it is not the problem of the CBE, but it is the problem of other sectors that are not functioning, that are not supplying the Central Bank of Egypt with dollars. And we lost a big chunk of our foreign reserves because of the outside commitments and because of stabilizing our currency. We lost a big chunk of dollars in stabilizing the currency, as well as the commitments on the Central Bank of Egypt in terms of debt service, in terms of imports, LCs. There's a big problem. I mean, the way out is not blaming the Central Bank of Egypt on the exchange rate.
But they're spreading the brunt. Everybody is blaming the central bank, as if it's the sole
responsible entity for what is happening. But actually, this is not true. As we said, you have 5 sources of supply of dollars, and these 5 sources are not functioning appropriately. There is a malfunction in that. As we said, export. What happened to export? I mean, we used to have like export of 30 plus billion US dollars. Now exports, we're talking 22 billion US dollars. Imports went up from 50 billion plus into 70 billion plus. So you have a big trade deficit. So there is a problem with exports. If I am the Central Bank of Egypt, I would give export subsidies. I will select the top 100 companies that are exporting from Egypt and give them subsidies to maintain and sustain export flow. This is one thing. When it comes to imports, I find a kind of exaggeration in terms of our lifestyle. And the society became very consumer. And you look to consumers, it went up high. For instance, we imported automobiles with 3.4 billion US dollars. This is just one item. I'm not saying that we shouldn't import. No, we will continue to import. But again, some sort of fine-tuning to our imports bill. We have to have a kind of import substitution. I mean, look to other countries when they had embargoes what happened? They developed their industry, and they became having a very competitive product.
Okay, what about if, here we do the same thing, if we just ban the import of certain items that, we can manufacture here, what would happen?
That's what we mean by import substitution. It's not about banning, but it's about, another problem. If you make banning for this product for the purpose of encouraging Egyptian products to boost, the issue is, if this foreign product is not existing in the market, the quality of products from the local market will go down.
Yeah, and we'll have to just, buy the raw...
And you end up just buying local products. I don't mind, and I would favor buying local products, conditional that they are reasonable in terms of price, and they are of the same quality or a bit...
Not to be forced to buy rubbish, in order to...
Exactly, value for money.
How can that be controlled? It's like, okay, we don't have that, then, we use the need of people for certain products, so, we just, make rubbish in order to sell it, so that, because we don't have the...
You have to support the local industry. You have to make sure that standards, specifications, and quality are in place. Many things. So, but don't tell me, just drop the foreign product and go for the local product. That's not fair. Okay? That's one thing. So export subsidies would be a solution.
Yes.
Import substitution would be another solution. You have to bridge the gap between exports and imports. You have to bridge the trade deficit. That is one thing. The second thing is that the number of factories that are closed, you have to bring them back to business. You have like 4,000, 5,000 factories. Few of them are export-oriented. Again, bring them back to business. Try to give them a boost, give them some concessions, give them some incentives. You have to have a proper feeding industries. And we have seen last that the Central Bank of Egypt allocated like 200 billion Egyptian pounds for small and medium and microfinance and microlending, and with an interest rate of 5%. On the other side, that banks over the coming 5 years would have to allocate 20% of their portfolio to finance small and medium enterprises. That's, in the sense, is good to create another layer of feeding industries. If you, for instance, look to your export, all your export products are raw material. So they are not processed products or in the shape of a final product that you can export to the outside market with an added value. But unfortunately, I would say that 60-70% of your export volume, raw material, raw products. One thing that most of the components for export-based industries coming from the outside world, that puts more pressure on the dollar. So for the moment, I would be very sensitive to more devaluation. And if devaluation is to happen, it has to be on phases, from my point of view. I might be wrong.
Devaluation means the dollar will keep increasing.
The dollar is not increasing, but the local currency is
decreasing.
Is devalued or depreciated. The dollar is the same. I mean, if you look, because our currency is pegged to the US dollar. If you look to, for instance, other currencies like the Kuwaiti dinar, the exchange rate is very, very stable between the dinar, the Kuwaiti dinar, and the dollar. But in Egypt, the dollar as a value is stable. Of course, if the United States for the last 12 years is witnessing a growth rate of like 2%. When the growth rate of the economy or of the GDP increases, that means that the currency is appreciated. But again, the dollar is stable. What happens is that the Egyptian pound goes down, is devalued. The purchasing power of the currency gets less. Inflation is going up. So it is a very difficult situation. So I would be very sensitive on the devaluation of on the local devaluation of the currency. Interest rate has to be reviewed. You have to support export subsidies, and you have to have import substitution. I'm not a fan of banning products. I mean, you can put high taxes. Even you can put taxes in dollars on some of the luxurious products, for instance. But taking police measures for an economic problem is not suggested. Or you need to sort economic problems with economic tools. You need to sort money problems with money tools. You know what I mean? So that is the issue. So it's not the Central Bank of Egypt to blame. Maybe the Central Bank of Egypt takes part of the blame, but not all the blame, because other sectors are not functioning. I mean, tomorrow morning you have to bring investments back, foreign direct investments, whether greenfield investments or greyfield investments. That's not the case. I mean, most of the 90% of foreign direct investments in Egypt in the oil and gas sector.
Yes.
How about other sectors? That's one thing. You have another problem for the repatriation of profits. You have a problem of, although the law approves that foreign firms, they have the right to transfer their profit to the holding firm or to the mother firm, but because of the shortage of supply and we don't have enough dollars, so we are witnessing few problems. So you have to send a clear message to the market: bear with us. Don't rush on dollars. Don't rush on transfers. I mean, you have to encourage the household sector to bring the dollar back to the veins of the economy, to the banking industry. I mean, in the old days, before 2011, you have workers' remittances of $18 billion. That was the second source of dollar supply in Egypt. What happens to Egyptians working abroad? One, they give the dollar in the country where they are stationed in, and Egyptian pounds are paid to their families in Egypt. So the dollar is kept away from the Egyptian market. That's one thing. Even those who transfer dollars to the families receive the dollar, not the local currency. So if I'm working for instance, in Kuwait or in Saudi Arabia, and I'm earning $1,000 US, and I get $800 to be transferred to my family in Egypt. My family used to go to the bank and take the equivalent of the $800 in Egyptian pounds. Now they don't. They take the $800, they go to the parallel market and exchange it. Or they keep the dollar as a saving instrument, like the gold, because they think that the currency, the Egyptian currency, will be depreciated more, will be devalued, then they can make a capital gain. So it is a problem that has multi-dimensions. We have to sort that out. Not only the Central Bank of Egypt, but the Egyptian government.
Okay, we'll come to this in like how to sort that out. We'll go for a short break. After we'll be back again. Stay tuned to us. Don't go away.
Egypt has uniquely undergone two revolutions in less than 3 years for better living and the rule of democracy. Egypt remains, after all, as an attractive investment destination despite the difficulties it faced. Ahead of the 2011 revolution, the Egyptian economy was performing well, as confirmed by all KPIs.
very confident about the Egyptian market. The main factors or the main pillars of the Egyptian economy are still here, and they're not going anywhere.
Egypt is a good place to invest, first of all, because it's a big market. It's a big local market. It's a good geographical location. You have good people, and the costs are competitive. So it's a great place. It was, it is, and it will be a great place to invest.
Welcome back again to my news visit. We have with us our guest, Dr. Ibrahim Ashmawi, and Doctor, also, we haven't talked about the exchange
Rate problem.
Yes, how do they contribute to this problem that we have here with the shortage of the dollar or the rising price of the dollar?
You have to have a comprehensive solution in the sense that you have to encourage investments to come back to Egypt.
Mm-hmm. But you said now, with the rate of the dollar, we're not, well, the intent is, to encourage, but,
the problem is that you don't have stable policies.
Yes.
If you have kind of stable economic policies, people will be able to run their financials and see the risk premium. They would look to their profit margins or the markup. The issue is you have to give, I don't want to say that you need to strip, but what I need the Egyptian government to do is to settle all cases, investment cases. You have a very good tool for settlements of problematic issues in the investment sector, but still it is not functioning as such. So you need to send a clear message to the outside world that you settled all the cases, even if it requires some compromises on your side, on the government side. But the message has to be crystal clear, loud and clear, that we settled all problematic issues with investors, with local investors, and let me highlight that, and foreign investors. If you do that tomorrow morning, then you will send a very clear message that Egypt is not in confrontation with investors, but on the contrary, Egypt is inviting investors to come in the Egyptian land. This is one thing. On the other side, if you look to the Suez Canal, you have many parts. You have north-west Suez Canal. You have southeast Suez Canal. And the Suez Canal has to be one of the largest logistics center in the world. How do you use our Suez Canal? We are using the Suez Canal as a road whereby you charge the vessels from this point to that point. Okay? How about having logistics areas in the Suez Canal? I would say that you invite the big 5 logistics centers in the world, like Harbor of China, Singapore, Hong Kong, Dubai, and others, and you tell them you take the Suez Canal for a period of like 50 to 99 years. They will bring investors. So you don't have to worry about bringing investors, but you can give them the key, and they will bring in the know-how, they will bring in investors. I wouldn't encourage that the government at this stage to promote investments, but I will get others
To do it.
to do the job. They have more credibility. Even in the past, when we go for door knock programs in the outside world to promote investments, we used to take the back seat, and we get the foreign investors to talk about the case. They have more credibility, and they listen to them. But when government talks, or when senior government officials talk to outside investors, there is a problem of trust and confidence and credibility. But get investors, foreign investors, to talk to the outside world about a successful or a credential case. So if I to look at the Suez Canal as one of the mega projects in Egypt, and this mega project would require an arm and a leg for infrastructure investments in all aspects of infrastructure expenses or investments, bring the investors to do that for 50 years. You give them the right, the royalty to run such area. They will bring investments, they will bring cash, they will bring dollar. They might raise dollar from banks in Egypt, but another chunk of dollars will come from the outside world. Investors will bring that. So Suez Canal is one of the mega projects. It's a key project in Egypt, not as a passage, but as a big logistics area in the region. It should be among the top 5 logistics areas in the world. So bring in, don't reinvent the wheel. Bring Singapore, you take north, east Suez Canal. You bring Dubai, you bring a harbor of China, but not to go and knock doors on investors. Let them do this job on behalf of you, and they are very good in doing it. They will replicate their successful story. That's one thing when it comes to investments. I'm glad that again we have the public enterprise as a separate ministry. What will happen that such sectors, we have 8 sectors under this umbrella, 8 industries under this umbrella, that you need to work on to raise capital in dollars. Get partnership from foreign investors. Who would do that? Local investors. So through investment banks, buying equity and bringing in foreign partner with the know-how. So you might create kind of dynamics in the industry. You bring in dollars. What you need to do at this stage is to bring more dollars to the pool. The first thing to work on is bring foreign direct investments. And that's the only way out to Egypt at this stage to maintain a growth rate of 5.2% as was announced in the program of the government. That would require encouraging inward investments. Trust, confidence, and credibility. Not from the government side, but has to be from the investor side to talk on behalf of the government.
Dr. Ibrahim Ashmawi, thank you very much for being with us here.
It's been a
in
pleasure.
This episode. I'd like to thank our viewers for being there for us. As you always end, we say God bless our Egypt, God bless our Egyptian army, and God bless our Egyptian people. We'll now leave the ground for my colleague Nabi Abdul Rahman with the latest in the stock market. Stay tuned to us. Don't go away.
Egyptian government is planning to reduce the state's budget deficit to 9 to 10% by the end of 2016-2017 and to 8 to 9% by 2019-2020. Prime Minister Engineer Sharif Ismail added in his Sunday speech to the House of Representatives the government is targeting to reduce public debt to 92 to 94% of GDP by the end of 2017-2018. The country's budget deficit for 2015-2016 stands at 251 billion Egyptian pounds, which represents about 8.9% of GDP compared to 279.4 billion, which represents 11.5% of GDP. The Prime Minister said that economic growth rate is expected to be settled at 5 to 6%, clarifying that more progress in the growth rate requires raising gross domestic savings to 9 to 10% of GDP instead of the present rate, which is less than 6%. The Egyptian exchange reversed Thursday's early losses as its indices collectively ended the week on a higher note, powered the purchases of national individuals. The benchmark broke the barrier of 7,500 after leveling up 39.9 points or 0.53% to 7,524.9 points. Likewise, the small and mid-cap EGX70 rose 0.13% to 367 points. The broader index EGX100 closed higher 0.34% to 792 points. The equal weighted index EGX50 increased to 1% to 1,426.7 points. EGX30 is presently moving sideways between the support level of 7,400 and the resistance level of 6,600 following the latest uptrend. Prices in Egypt continued to be stable in March. All the companies, excluding Spanish-Egyptian Cement Company, kept March prices at their levels a month earlier. Lately, the country's cement industry has seen an increase in production and a decline in supply and local purchasing. The average cement production per week reached 1.48 million tons this week compared to 1.1 million for the same period last month. The local market received 996,400 tons this week compared to 1.1 million tons for the same period last month. The Egyptian government has not entered into any negotiation on financial aids or loans through International Monetary Fund, the IMF. The International Fund does not mind lending Egypt a helping hand if called for assistance. Chris Jarvis, IMF mission chief for Egypt, said that the IMF welcomes the latest measures adopted by the Central Bank of Egypt, including pound devaluation and the application of a more flexible monetary policy, which will achieve a positive impact on Egypt's monetary reserve, imports, tourism, and the flow of direct foreign investments. Earlier, the Egyptian pound was devaluated by 112 piastres against US dollars. Egyptian government has suspended the export of rice starting from the 4th of April 2016. This decision aims to meet the local market demands that have been largely growing. In October 2015, the government lifted ban on rice exports as a result of an expected surplus of production, imposing an export tariff of 2,000 Egyptian pounds per ton until the 4th of April 2016. The total exported amount has not exceeded 40,000. Tariq Qabil, Minister of Trade and Industry, said Egypt cultivated rice grains over the area of 1.27 million acres in 2015-2016. The expected harvest stands at 4.4 million tons, while the domestic consumption is likely to reach 3.6 million tons. Dubai financial market DFM saw a bullish performance in the last week of March amid the uptrend of global markets. The general index gained 1.1% or 36.8 points to reach 355.53 points. The market's performance was backed by the overall rise of global markets and the fluctuation of oil prices at acceptable levels amid the news that U.S. Federal Reserve will raise interest rates at slow pace. Turnover stood at 1.7 billion AED compared to 3.1 billion on Wednesday. European shares finished today's trading session in the green zone after U.S. Federal Reserve Chairwoman Janet Yellen talked over interest rate at the Economic Club of New York. Stoxx 600 closed higher 1.3% to 341.18 points. UK's FTSE 100 rose 1.59% to 6,203.17 points. France's CAC 40 increased by 1.94% to 4,444.4 points. German's DAX was up 1.6% to 10,046.61 points. Most European stocks closed the trading session on mixed note, as traders and investors were in suspense for the chairwoman's speech, in which she reiterated that interest rates would rise slowly. Current account deficit widened to a record high in the final quarter of last year. The deficit in the 3 months to December was 32.7 billion, the equivalent of 7% of GDP. For all of 2015, it came to 96.2 billion or 5.2% of GDP. Both figures were the highest since records began in 1948. A current account deficit means the value of imports of goods, services, and investment income exceeds exports. At the same time, ONS figures showed the UK economy grew 0.6% in the fourth quarter of 2015, higher than previous estimates of 0.5%. Oil futures fell in Asian early trades amid renewed worries of global oversupply after global oversupply OPEC rose in March. Brent crude futures fell 0.8% to $38.94 a barrel. Crude output from OPEC rose to 32.47 million in March from 32.37 million in February. Crude futures were weighed down at open by recent data released by OPEC, which came contrary to expectations of a possible output freeze to be discussed in the meeting of oil procedures on the 17th of April in Doha. U.S. crude declined 1.2% to $37.86 per barrel. U.S. crude stockpiles rose by 2.3 million barrels to the week ended 25th of March. Argentina's President Mauricio Macri has won approval for a repayment deal which should put an end to the country's 15-year battle with holdout creditors. The years-long debt crisis has restricted Argentina's access to international credit markets and made doing business in the country difficult. Argentina defaulted on a $100 billion loan in 2001. The deal is with creditors in New York. The repayment package was finally approved by the Senate after a 12-hour debate on Wednesday. Argentina now only has until 14th of April to pay the holdouts. Commodity markets may have experienced sharp turbulence in the first 3 months of 2016, yet one precious metal seems to have weathered the storm almost effortlessly: gold. Gold has seen its biggest 3-month gain since the third quarter of the 1990 year, showing gains of more than 15% so far this year. And if it continues its winning streak, gold could be heading for its best quarter in close 30 years. Gold prices have been boosted in recent months thanks to global market sell-offs, geopolitics, and concerns over leading economies being potential reasons why prices are heading higher. Prices in the Eurozone fell for the second month running in March thanks again to falling energy prices. Prices were 0.1% lower than a year ago. The figure was a small improvement on February when deflation was running at 0.2%, but it maintains pressure on the European Central Bank to act further to boost prices. Deflation can be damaging for economies, particularly if consumers put off buying products in the belief that prices will fall further. The ECB is charged with keeping inflation close to but below 2%.